SpaceX just pulled off something aerospace hadn't seen in decades, the first publicly traded rocket company IPO. And here's what happened next. In less than 24 hours, the stock jumped 6%, landing SpaceX in a valuation range that immediately sparked what Wall Street's calling the valuation debate of the century. So here's the fundamental question. Is Elon's company actually worth that price? Because SpaceX isn't your typical aerospace contractor. Boeing sells planes that last decades. SpaceX launches rockets, operates a satellite internet constellation called Starlink that covers the entire planet, manages military contracts, and is building the infrastructure to establish a human colony on Mars. That's not one business, it's 5 different revenue streams, each with its own risk profile and growth trajectory. When the stock opened on day one, traders had to make a split-second decision. Are they valuing SpaceX based on what it's earned this year or what they think it'll earn in 20 years? That question is what's driving the 6% surge. Because Wall Street has never quite seen a company like SpaceX before. There's no historical playbook. And that uncertainty cuts both ways. It's why some investors see a generational opportunity and why others think the valuation is completely detached from reality. But here's where it gets interesting. The answer to both arguments might actually be hidden in the numbers. To understand why SpaceX's valuation is so controversial, you've got to understand how improbable this company even exists. In the year 2002, Elon Musk took the money from selling PayPal and did something everyone thought was insane. He started a rocket company. At the time, aerospace was dominated by legacy contractors like Lockheed Martin, Boeing, and Northrop Grumman. These companies had been building rockets since the 1960s, and they'd basically decided that spaceflight was so expensive only governments could afford it. Rockets cost $65 million per launch, took years to build, and were thrown away after a single flight. Then SpaceX arrived with a radical idea. What if we made rockets that land themselves and can be reused? Everyone laughed. The aerospace establishment said it was impossible. But Musk's team didn't just make it work, they made it cheap. Today, SpaceX launches cost a fraction of what they did 20 years ago. By 2015, they'd landed the first orbital rocket booster. By 2018, they were flying used rockets. By 2024, they were doing it routinely. That change changed everything. Suddenly, spaceflight wasn't just for governments anymore, it was for anyone with the budget. Commercial satellite companies could launch dozens of satellites for less money than a single government mission cost in the 90s. And here's the breakthrough that shocked everyone. SpaceX's revenue grew so fast that the company became profitable. And now, Wall Street sees a rocket company that's actually making money. Here's where the valuation debate gets complicated. SpaceX doesn't just have one way of making money, it's got 5. The first is commercial launches, that's SpaceX taking satellites and cargo to orbit for private companies and governments. That's a proven, profitable business. The second is Starlink, a constellation of 10,000+ satellites that provide internet to every corner of the planet. That's brand new and still burning cash to build out. But it could become a $30 billion market by itself. The third is government contracts. The military pays SpaceX to launch national security satellites, and that revenue is guaranteed by contract. The fourth is the Starship program, the massive, fully reusable rocket that'll eventually carry people to Mars. That's still in development and might not generate revenue for years. And the fifth is pure speculation on the future. Will SpaceX actually colonize Mars? Will they mine asteroids? Will they become an interplanetary logistics company? When investors bought SpaceX stock, what exactly are they buying? A piece of the profitable rocket launch business today, a bet on Starlink becoming the global internet in 10 years, or a lunar shot on becoming a truly spacefaring civilization? Different investors answered that question differently. And that's why you got such wildly different price targets from Wall Street analysts. Some valued it at $100 billion. Others said $500 billion. So let's ground this in reality. What does SpaceX actually make money from right now? Commercial launches are the core business. SpaceX charges roughly $65 million to launch a standard rocket, and they've done over 80 launches in the last 3 years. That's real revenue, real profit. Government contracts add another layer, the Air Force, Space Force, and Space Development Agency contract SpaceX for launches worth billions of dollars over multi-year periods. Those are signed, guaranteed payments. That's not speculation. Then there's Starlink. Right now, Starlink's business model is selling internet service to individual customers and to businesses in areas that don't have broadband. They've got customers paying $500 to $1,500 per month, depending on their plan, with millions of subscribers. Even at low prices, that's a multi-billion-dollar business. But here's the thing, Starlink's still burning money building out its constellation and infrastructure. It's not yet profitable as a standalone business. So when you value SpaceX, you're buying the proven profitable businesses today, plus betting on Starlink becoming profitable tomorrow. And that's where the debate gets real. If Starlink does for global internet what SpaceX did for spaceflight, cutting costs in half and opening up a market that everyone thought was saturated, then that $500 billion valuation starts looking reasonable. If Starlink struggles to compete with terrestrial broadband providers and stays a niche service, then SpaceX's valuation is too high. To really understand whether SpaceX is overvalued, let's compare it to the company everyone thinks should be SpaceX's rival, Boeing. Boeing is a $200 billion company. It's been in the aerospace business since 1916. It's got massive government contracts, proven revenue streams, and decades of institutional knowledge. And yet SpaceX is now valued in a range that's starting to rival or exceed Boeing's market cap. How is that possible? Here's the answer. Boeing makes planes that fly once a week for 30 years. SpaceX makes rockets that fly once and get reused. That's a totally different business model and a totally different growth trajectory. Boeing's revenue is stable and predictable because it's selling to a mature market. Airlines have been buying planes for 70 years. The market's not growing exponentially. SpaceX's revenue is growing exponentially because it's opening a market that barely existed before. In 2015, only 20 commercial launches happened globally per year. In 2024, it was over 100. That growth trajectory is why SpaceX can command a higher valuation than Boeing despite generating less revenue right now. Boeing's got a proven business printing steady cash. SpaceX's got a growing business with massive upside if everything works out. Wall Street investors are betting that SpaceX's growth rate, not its current size, is what matters. They are looking at the trajectory and saying this company will be bigger than Boeing in 10 years if it executes. And maybe they are right. But that's a bet. It's not a guarantee. That's what makes this valuation debate so fierce. Here's why this SpaceX IPO matters beyond Wall Street. If SpaceX's valuation is right, if investors are correct that this company will revolutionize spaceflight and satellite internet, then we're about to see an explosion of competition. Other companies are racing to build reusable rockets. Blue Origin, founded by Jeff Bezos, is developing New Glenn. Rocket Lab is building bigger rockets. Chinese state companies are also investing heavily in reusability. All of them are looking at SpaceX's success and asking, why can't we do that? And that competition will drive down launch costs even further. It'll make space more accessible. It'll enable applications that don't exist yet. Think about it this way, when commercial aviation became cheap, it didn't just mean more people could fly. It meant that entire industries got built on top of cheap flight. Tourism, business travel, supply chains that depend on moving goods across continents. SpaceX is doing the same thing to space. If they succeed at making space cheap and accessible, entire new industries will emerge. But here's the flip side. If the valuation bubble bursts, if it turns out SpaceX's growth slows down or Starlink can't achieve profitability, then you're looking at a lot of disappointed investors. And that matters because SpaceX's success or failure will determine whether other companies invest in space technology. One failed SpaceX could cool investment in the entire sector for years. The stakes are genuinely enormous, and that's precisely why this 6% debut gain and the valuation debate matters so much. If you're trying to understand whether SpaceX's valuation actually makes sense, here are the 3 metrics that matter most. First, launch cadence. How many launches can the company do per year, and how fast can that grow? SpaceX did 80+ launches last year. They're building more launch sites. Theoretically, they could do 200 launches per year by 2027. That's a direct multiple on revenue because every launch generates cash. Keep an eye on this number. Second, cost per launch. SpaceX has brought launch costs down from $65 million to around $30 million for reused rockets. That margin is what makes profitability possible. As their rockets get older and more reliable, those margins get better. Watch whether they can push costs even lower. That's the difference between a $200 billion company and a $500 billion company. Third, Starlink subscriber growth and average revenue per user. If Starlink adds 10 million subscribers per year at $60 per month average revenue, that's $7 billion in annual recurring revenue. That's the kind of number that justifies SpaceX's valuation. But if Starlink tops out at 5 million subscribers because satellite internet can't compete with terrestrial 5G, then the business case falls apart. These three metrics, launch volume, cost reduction, and Starlink growth, are what determine whether this valuation holds up or collapses. Track them. They are not exciting, but they are what actually matters when valuations get questioned. And that's exactly what's going to happen when the next earnings report comes out. Here's what you should take away from this SpaceX IPO moment. This isn't just a stock story. It's a signal that Wall Street and investors around the world are placing an enormous bet on the future of space technology. They are saying spaceflight is no longer a government monopoly. They are betting that private companies can do it better, faster, and cheaper, and they are willing to pay premium valuations for the companies that execute. That matters whether you own SpaceX stock or not, because if they're right, then space technology is going to be a major part of the global economy in the next decade. Satellites will become as essential as internet. Launch costs will continue dropping, and new applications we haven't even imagined yet will emerge. But if investors are too optimistic, if they've gotten caught up in Elon hype and Starlink promises that don't materialize, then valuations will correct sharply and capital will flow elsewhere. Either way, what matters is that you understand the difference between speculation and fundamentals. SpaceX has proven profitable businesses today. That's the floor. Starlink growth, new Starship applications, and future revenue streams, that's the ceiling. The 6% debut gain and the ongoing valuation debate suggest investors are pricing in somewhere between the floor and the ceiling. Your job as a thinking person is to decide where on that spectrum you think SpaceX actually belongs.